Hi, everyone. Thank you so much for joining. Looking forward to diving in today to the topic of winning the next generation of clients. My name is Molly Fernandez. I work as the Director of Enterprise Customer Success here at YCharts, and I am joined by Nick Maggiulli. Nick, I'll pass it over to you to introduce yourself.
Thanks, Molly. Yes, I'm Nick Maggiulli, the Chief Operating Officer at Ritholtz Wealth Management, and I'm also an author of a few books out there. And I have a blog of dollarsanddata.com. But I'm very excited to talk about the great wealth transfer and how to win the next generation of clients today. So, going to turn it back over to you, Molly, to kind of talk about what we're going to cover.
Thanks, Nick. Few housekeeping notes before we dive in. Please do keep in mind that the content of this webinar is meant for educational purposes only and is not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. If you do have any questions during the webinar, feel free to ask them via the Q&A feature at the bottom of your screen, and we'll get to as many as possible at the end of the webinar. Finally, I'd also like to point out that a recording of this webinar, as well as a copy of the slide deck, will be emailed to everyone after. Additionally, feel free to head over to the YCharts webinar library to view the recording of this webinar, as well as an extensive library of our other past webinars. So with that being said, we'll go ahead and start to dive into some of these topics. As you'll see, we'll cover a range of information here today, starting with talking through some of that great wealth transfer all the way through to how we can speak to the next generation and some insights in terms of how they think of investing. And then finally, talking through what that opportunity ahead looks like for advisors. So starting here with the great wealth transfer, this is an area that I know is talked about frequently. $84 trillion will be transferring over 20 years from largely baby boomers into the next generations, in particular, Gen X, millennials, and Gen Z. We'll focus a lot on millennials and Gen Z in particular today. There's a few pretty, I think, shocking statistics when it comes to thinking about the great wealth transfer. One in particular is that 80% of heirs fire their parents' financial advisor. So as this money is transferring hands, it is also often transferring through advisors, as the next generation looks for other people to give them that advice. But in tandem with that, we see definitely a need here across generations for some of that guidance, some of that advice. 82% of millennials say their financial planning needs improvement. And so there's a large opportunity to be able to provide that advice and wisdom and partner with that generation in particular as they start to experience this wealth transfer. Maybe on the other side of the coin, I think we see a definite lack of Gen Z seeking professional advice, with only 20% of them looking for that. That's another area that if someone is able to speak to that generation in particular, there's a large opportunity to be captured to help provide some of that pathway to their financial journey throughout this transfer as well. Nick, anything that you see in your expertise with some of these numbers and your experience?
Yeah, and so I think one of the issues with advisory in terms of like next generation planning and things like that is that advisors are so focused on servicing the client and, getting good returns, making sure the client doesn't leave, that they're focusing on like market volatility and they're not focusing on the relationship and the possible relationship volatility that can happen afterwards, right? And so I think you need to think about this more holistically with your practice. Like as you go through, like, okay, here are all my clients, like, are you prepared for the coming wealth transfer that's going to happen? Like, have you thought about how you're servicing your clients' children, right? And do you even have an actual service model for them? Because a lot of times I understand the dynamic here where you're like, well, I don't want to bring on the child because I don't have that much money yet. I don't want to spend all this time on them. And I get this, right? You're still running a business at the end of the day, but is there a service model that you can come up with where maybe a junior advisor services them, but you're still involved in the relationship in some way so you can build that trust? And I think that's where you need to kind of fine tune how your service model works and how you're kind of working with the relationship. And I think this is how you win in the long run is you have to focus on retention more than returns, right? In this case.
Yeah, absolutely. And we see that often as a driving factor. So that focus on retention over returns is really important. Most heirs cite leaving their parents' advisor not due to performance dissatisfaction, but just not feeling that personal connection with that advisor because the relationship hasn't been established. So often when thinking about retention and retention of that next generation in particular, the focus really depends on the relevance of the information, the relatability that they've developed with that advisor, and then importantly, the trust built before the transfer so that there's a relationship there ahead of that event. Um, Anything to add within here, Nick?
Yeah, I think you need to focus on like the delivery of your advice, right, to your clients, and not your main client, but I mean like the client's children, anyone in Gen Z, because I mean, how are you going to connect with these younger clients? All right, you don't want to come across as too old school, right? I mean, that is, I'm not saying you need to go and start a TikTok and do, we don't need to go that far in that direction, right, to kind of connect with younger investors, but I do think you kind of need to think a little bit more in how they think, right? They're native to the internet, right? They're native to digital content, right? So you're probably going to want to present more visuals. You're going to probably want to do things that it's a little bit more web-based for them because that's what they're used to. They're on their phones all the time, right? So if you don't currently have that or you don't really have that fully developed, that's something to think about. And you need to kind of ensure you have those tools kind of in your toolkit as you're thinking about how to deliver that advice to the next generation. And, with that being said, I think we can kind of turn to the next section, which is on just how do we understand the next generation in general and like what's really going on with them, what's their thinking of, financial advice, et cetera. And I think one of the big disconnects we see is that younger investors like don't fundamentally understand what advisors do. Many of them don't. There's only a small fraction that do. I think there's a massive perception problem that they think, oh, and advisors are just to manage investments, right? That's all they do, right? And that was true historically, but they don't realize that the entire industry has shifted towards more holistic financial planning, right? And so because they don't know that, there's just a misperception. As some of the notes say here, 42% of young investors think advisors are only for the wealthy. 44% believe that you don't need an advisor until you're in middle age, right? And 45% overestimate fees. And when I say overestimate fees, I'm not just saying like, oh, they think the fees are 2% when they're 1%. Like when we actually looked at the data, like the range on the AUM fee people thought was like somewhere between 5% and 15%, right? Like, don't we wish, yeah, wouldn't life be great if we could charge 5% a year, right? But the truth is they just don't know the model, right? They have no idea. Like they're off by like not like one, or they're not off by 50 bips. They're off by an order of magnitude. They think some people think that advisors are charging 10% out there, right? And so I think that really illustrates that there's just a disconnect between what younger investors think about advisors and what advisors actually do, right? And so I think ultimately they're not rejecting advisors, they're just rejecting these outdated models. Like why would I pay someone 5% a year to invest my money, right? And that's obviously not what advisors do. And I think it's as a result they end up getting information from the wrong places. So I think they're getting information from non-professional sources because they don't trust the model. And so you need to kind of make sure they're educated on this stuff. So I think let's actually look at like where they actually get their information from. 48%, as you can see here, rely on social media for financial advice. And if you look at like this chart shows kind of by generation, like there's clearly like Gen Z in particular is getting far more of their information from internet's website, social media, and then when they can't find that, they go to family and friends, things like that, right? More so than other generations. And so as you can see, there is demand for financial advice. 71% of Gen Z said, they have demand for the services, but they don't know where to look. And because of that, like they end up in this spot where they just don't know what to do. And so they end up getting incorrect financial advice, right? As it shows here, 41% have acted on kind of financial misinformation when making investment decisions, right? And so when you think about that, like this is showing up in how they invest as well. I think it's another thing to keep in mind is like they are actually more concentrated. Can we go to the next slide? So they're more concentrated in crypto, they're more concentrated in NFTs and things of that sort. So we're seeing that kind of shift because of how they are thinking about the landscape and where they're getting their information from. When everyone on social media, on Twitter or something is like, "Oh, look at this insane gain I had in this crypto thing," they're more likely to invest in those things, right? And so I think this is one of the disconnects. You're starting to understand like how are they looking at the world? Like where are they getting their information from? And then based on where they're getting that information from, how are they allocating their portfolios? And what's not shown on this slide though is like Gen Z in general cares a lot more about other things besides just returns. They're very values based. So I know ESG was like a big trend. It came and went, but like I think it is something that is actually still fundamental to Gen Z investors. They do care about things like freedom, flexibility, meaning. They care about like a larger moral framework when making an investment decision, right? And so in general, like they are investing, in a lot of these different, asset classes, but they're also want to connect the outcomes that you have when your portfolio with the values that they care about. So it's something to keep in mind. It's not just like asset allocation. It's like, how are you approaching this problem and how is that going to connect with them, right? So your asset allocations in general need to like be contained within this larger framework. One other thing I need to say about this is like a lot of these younger investors invest through apps. Once again, as I was talking about earlier, you need to be more digitally native. Like 75% of Robinhood users are under the age of 43. So like I'm not saying you need to build an app for yourself, but it wouldn't hurt if you had some sort of platform that they could use on mobile. If you just have a website login, that may not be enough to kind of get Gen Z to kind of come along with you.
Yeah,
Um,
absolutely.
yeah.
That's super helpful, Nick. So we'll talk a little bit through that like education and how you connect with those individuals in particular. So building upon what Nick was saying, I think it's really important, as we discussed earlier, not to just focus on the return side of things. So making sure that rather than just being the money manager, you're framing yourself as a life planner and really a partner in that journey. And there's different ways that you can do that and really lean into that. As we discussed, it's important to use like storytelling and visuals to help convey this information because that's a way that these generations are used to receiving information and a way that resonates with them in particular. It's important too to like tailor that information to their particular goals. So making sure that's personalized and relevant to the individuals that you're talking to is really important rather than it just being cookie cutter. I think those personalized narratives go a long way in terms of how do you holistically plan? How do you partner with these individuals beyond just the investment management piece, which is obviously a critical piece, but also there's financial planning, there's maybe tax planning that they might not be aware of, plenty of other ways that you can really assist them and guide them throughout that journey. And while the storytelling and narratives I think are particularly impactful, it's still important to back this up with data and be able to derive where you're driving those insights from and share some of that information. And then finally, as we mentioned, just partnering with the individuals, really positioning yourself as a guide so that you're with them through those different steps in their journey rather than just providing a market opinion when things maybe are bumpy and they're looking for insight in that particular area. And so tying that and maybe taking that a step further to this slide of becoming more of that credible voice. One of the things we mentioned in particular is really some of the plethora of information that's available to Gen Z, millennials, these younger generations that they receive on the internet. And so there is so much information out there, but while there is a great quantity of that, sometimes parsing through that can be difficult because there's an overwhelming amount of information. Some of it can be conflicting, some of it can be wrong. So being able to provide your expertise to your clients is really important when you're helping them parse through some of that noise. And there's quite a few different ways that you can do that. I think it's important for you to share your own expertise. It's also important to learn the perspective of what those individuals who you are now working with are coming to you with, and where they might have learned that information previously. And either you can clarify that or help support some of those ideas that they already have. But continuing to build that relationship in tandem with them is going to be really key in terms of earning that trust throughout the relationship and being able to retain that business overall in particular. So one of the things that you can do here is use lots of different tools. I know there's some tools within YCharts in particular that will help you with these narratives and creating this trust. Anything, Nick, that you're typically using to help tell some of these stories?
Yeah, so imagine, a younger investor comes to you, right? Or client of yours, maybe your client's children, and they show you this chart. And the chart shows the S&P 500 since the year 2000 and the price of gold, right? And the returns in those two things, right? And over this period, if anyone's seen this chart, actually went viral recently, gold has outperformed the S&P 500. So you see this thing, and the argument, obviously, why would you ever own stocks? This thing is all made up. It's fake money. Gold is outperformed. Obviously, this is why you shouldn't even own stocks, right? And so you see a chart like that, and whether it's true or not, it could be misleading. In this case, it is misleading in a different way. I mean, the data is actually accurate, but a client sees that, or a client's child sees that, and they say like, hey, like, what's going on here or something. How do you build that trust with them? You have to show them another chart, right? And so I would use something in YCharts, like I'd grab fundamental chart, I'd say, okay, great, we can compare S&P 500 to gold, and you're right, look, it does show that. But now let's move to 2005 and see if that's still true. It's not. Let's move to 2012 and see if it's still true. It's not, right? Comparing the S&P 500 in the year 2000 to gold is like, S&P 500 in the year 2000, that was at the peak of the dot-com bubble. You're really comparing it like at its most overvalued point. It's not really a fair comparison, right? So the idea of clients are going to see this stuff, younger investors are going to see this type of stuff on the internet. They're going to come to you asking about it, and you need to have a way to respond to it or say like, yes, that is correct, or here's why it's misleading, right? And so that's where I think these types of tools that YChart has built, and it's very easy to go in there and just quickly, hit, SPY and then have, gold in there. And you can kind of have that chart up in less than a few minutes. You can have that chart ready and say, look, here's why it's misleading. Because if you start at this point, that's no longer true, right? So that's a very simple example, but it's one that I think would earn trust and would be like, hey, I understand why this is this way, but it's also not completely correct. And here's why. And I think by meeting them where they are and kind of acknowledging the truth in some of this information and then saying, hey, here's what's better, I think that's a better approach to take here.
Absolutely. And I think it shows how some of these approaches have to differ from maybe the traditional approach where the financial advisor would be the one providing that expertise. Now it's a little bit more of a pivot where it might be more of a two-way street and you're doing both some education, but also clarifying and making sure that the relevant information is being viewed by your clients, whether you're bringing it to them or they're bringing it to you.
Exactly.
So talking a bit more about how you continue to build that connection with this next generation, I think there's a few different ways. As Nick touched on earlier, one of the really important areas is making sure that you are linking their personal values, whether that's sustainability, whether that's innovation, whatever that might be, to their financial outcomes. So not only looking at their goals and making sure that they're achieving those goals, but also making sure that the pathway to those goals aligns with their values and that you are kind of fully supportive in their approach from that perspective. I think as we saw earlier, though, too, there's a lot of different investment vehicles in play with these new generations, and both being able to speak towards some of those options like crypto that might resonate with this generation is really important. It's also going to be important, though, too, to provide perspective on maybe some of the trade-offs between those speculative strategies compared to maybe a more diversified strategy that someone would have previously been in. So being able to model off the risk and return and see how that aligns with their long-term goals is going to be critical. And then finally, as this next generation inherits that wealth, they will likely be fairly early on in their financial journey. So being able to talk through longer term planning with them, showing how small decisions or changes that they make now can have very high long-term impact and outcome is important as they think ahead to retirement and as you continue along this journey with them for many years to come. This is probably something that also could be done in YCharts. Nick, any tools that you tend to use to illustrate some of these narratives in particular?
You would use Report Builder for this. That's the one to use because you can go and create a report saying, hey, here's where your current portfolio is. And obviously, you need to talk with the client, understand what's in their portfolio. If they have things in there that aren't in YCharts has a solution for that. You have a custom security. So, like, oh, I own this, esoteric crypto coin. Well, if you can find the data on that, just get the price data, you can put it in there as its own security, and then you can calculate the returns off of it, which is nice. So, YCharts doesn't have to have every single crypto that exists out there, right? And you can still get that information in there. But then you build their portfolio, you have obviously one of your own model portfolios in there. You can show a comparison over time. You can say, yes, over this period, yes, it might have underperformed, but it'll have less volatility, or it'll outperform on a risk adjusted basis, or whatever type of story you want to tell. And I think that's where you can really not only show the value stuff that you're talking about, but also like just show kind of like side by side comparison of like, this is what you have, here's what I have, and make it really easy to have that conversation and open it up more generally to discuss their portfolio and what they actually want. Is it just growth, or is there something more there going on under the hood?
Absolutely. Yep. And then having that flexibility to have those different conversations with different individuals, depending on what their situation is and what their goals
Mhm.
are in particular. Having that flexibility is great. So Nick, I'll hand it over to you to talk through some of these kind of real life decisions here in particular.
Yeah, so I think crypto is a good one to use because there are so many people invested in crypto, and I know this conversation is, so many investors and advisors. I mean, the range of opinion is very large. There's people out there that think it's zero, people out there think it's going to go to $1 million a coin, and even advisors that could believe this, and that's fine. So I think you need to kind of help your clients see the difference between excitement and strategy, and right, and like crypto's done very well over the last, let's say almost decade at this point, right? And so because of that, like Gen Z is very invested in it, and there's a ton of volatility as they know, and you can show like, hey, here's a 60/40, here is, just Bitcoin price. And you can see like there's a clear difference. You'd want one over the other, right? And this is showing just since 2021. So there's obviously a clear difference in returns over this period, but like showing them this sort of plot and then kind of walking them through like, yes, this is true that this asset has returned a lot more, but you can just as easily show them the volatility that it's had, right? And so you can say like, look, yes, it's returned a lot more, but it's also had these periods where it's been down 60, 70 something percent. And they understand this, I think, intrinsically, but just showing them like the comparison at a given point in time is like, hey, that's great and all, but that's not a long-term strategy, is having all your money in crypto, right? And so it has worked, doesn't mean it's going to continue working. Even right now, as we speak, Bitcoin is now once again below $100,000, even though, it's crazy to think it would even get to 100, but this is kind of what's happening, right? And so, 42% of Gen Z investors surveyed own cryptocurrency. I think it's a big thing to talk about. And, only I think 11% have a retirement account. This was as of 2025, right? So I think younger investors like think about speculation in a different way because they see it so often. They see so many people doing it. Like we have this big betting economy, with everything that's going on, sports betting, et cetera. And so I think they see a lot of this and it's normalized, and you have to kind of bring back the conversation like, hey, this is not normal. This is kind of like gambling in some ways, but you can have, I still think you can reframe it and say this can still be a part of a plan, right? You can say, hey, you can own Bitcoin. It can be part of a successful financial plan. I don't think you need to take it all the way to zero. I don't think that necessarily makes sense. At the same time, you need to kind of steer the conversation in a way that makes it helpful for the client at the same time, right? And so I think the opportunity here is to connect that short-term excitement with more long-term planning, right? And so and the reason why we're doing all of this is because we want to bring the clients into the planning process, right? They, younger investors, they want educations, but they want education of some sort, but they kind of want it on their own terms. And so how do you invite them in? Like you use visuals, as I said, they're native to digital systems, right? You learn about their values and you make it collaborative. Like there's all these studies, I'm pretty sure you guys have heard of the endowment effect. Like there are all these studies showing that like if you ask someone to value something like, hey, how much is this? How much would you pay for this water bottle? And someone says, oh, I don't know, $2, right? And then if you give them and say, hey, this is your water bottle, how much would you sell it for? And they would say, oh, I'd sell it for $5. It's like as soon as someone owns something, they value it so much more. And I think that's true. Both with, just any day objects, but it's also true with when you create a plan or when you create investments of some sort. So by having them be, a collaborative part of the relationship, what's going to happen is they're going to have more buy-in for your plan, and they're going to have more buy-in for the relationship that you have with them as well. So, right. So if you help, if you create the plan with them and you actually also try and make it seem like it's their idea, it's far more likely to stick. They're far more likely to kind of keep with it in the long run. And so that's why that's the kind of thing I like to think about when I'm thinking about how are you going through this whole process and how are you kind of structuring this for younger clients. And but this truly, I mean, this all starts by understanding your client fundamentally, understand what they're going through and when. So I think the big thing we need to talk about is life events. And so, there's different types of life events, obviously, buying a home, family planning, inheritance, all these types of things. And that's the perfect time for you to show up with your A game and say, hey, look, I'm here for you. Not only does it show that, you've thought about these types of issues and you can model them, using tools and things like that, but it also it's more memorable, right? Because think about like the times when like, oh my gosh, I'm going through this difficult time, whether that's family planning, as I said, whether there's some sort of inheritance, whether you're trying to there's all sorts of different life events that can happen, and you need to like think through those and say like, hey, what can I do to really help them at this time of need? Because later when they're thinking back, they're like, oh yeah, that person really, this advisor really did help me out a lot when I went through that difficult like job change, or when I got married, they helped with, all these other things that I never even thought about, like documents and things of that sort, right? So I think a lot of this is, there's a big opportunity lying ahead. And I think being there and starting this process early is how you make sure you cement those relationships for for everything that's going to come. And so I think that's kind of the next big thing to think about is like there is a big opportunity coming.
Absolutely. And when we're thinking about that opportunity, I think like you mentioned, Nick, and what a lot of this really boils down to is some of that relationship building, and proactive relationship building in particular, if possible, ahead of that wealth transfer in particular, to allow you to have those established relationships and build that trust, so that when the transfer occurs, you're well positioned and able to retain that business going forward. And doing so, I think, means starting to implement some of these takeaways sooner rather than later. And some of those are going to be that clients now expect, visuals and context in addition to the straight performance metrics. There's a lot of information out there. They're used to really receiving a lot of information, but one of the things that you can provide is some of that guidance and context and leaning into your expertise in those particular areas that they might not find on the internet. And so providing that value early is going to be really important. Making sure that that value is clear and supports their personal story and what's important to them, making sure that there's transparency behind your decision making process and recommendations, I think is going to be really valuable in cementing that trust in particular. And then similarly, continuing to show the why behind the plan, making sure that the expectations and outcomes are fairly clearly laid out as much as they can be, and why you're taking the steps that you're taking, so that there's a strong foundation for that relationship going forward, and the client feels heard, they feel like their values are being incorporated, but also importantly, you're moving together towards those goals. And so finally here, kind of talking through some of the different like opportunities that are here and how we can capture them. I think, Nick, you've already talked through a lot of these in terms of building connection and having the correct visuals. Anything else that you'd want to add here in closing?
Yeah, I think you got to start. I mean, the last point here is advisors who adapt early will own the next generation of wealth. I think that's very true to the point where by being more digitally native, I think it's going to make it much easier for you and your business to kind of stay connected, to the next generation of investors going forward. And this doesn't mean you have to grow a huge social media following. Like, you don't need to get a bunch of likes. You have to remember that like 90% of people on social media are lurkers. They don't interact at all. They don't even like stuff. They just read stuff and they just kind of keep scrolling, right? So you'd be like, there's no way that's true. But like they've done so many studies on this, like just by putting your message out there, like you are far more likely to get clients. People will think about you, especially in local networks. You don't have to dominate on the national stage. If you can just dominate in your local networks, that's where you can start, right? It's like, especially someone, because how the algorithms work, like you're more likely to see people in your local networks. And so because of that, you start putting stuff out there, even just a few likes here and there. You don't need to get popular. It's just popular enough where it shows up in people's feeds, right? And so I think about, I'm not saying you have to move your whole business to doing online digital content, but that's just a way of like being there, being where they are, so that they kind of think about you, like, oh yeah, this person really talked, they had this story about this one, situation they were dealing with. And that's kind of like what I'm dealing with now. And so maybe I should go talk to them, right? And so it's just about thinking about your business long term and how do you capture this opportunity. I think becoming a little bit more digitally native is one piece of this. Obviously, like this is happening everywhere, but it's like, how do you kind of do this and what's the long-term plan? And I'm happy to kind of discuss this in more broad strokes. But I think, as we said here, focus on the connection. That's everything here. And, try and find ways to use visuals, because not only do they work better on social media, but like it builds trust, and people are used to seeing these things. And that's where attention is shifting, and that's kind of where your marketing needs to shift to if you're trying to get the next generation of clients.
Yeah, I think that's super insightful. Thank you, Nick. I think we've got some time here for questions. So if anyone has any questions, please feel free to put them in the Q&A, and we should definitely be able to tackle a few. Nick, maybe one question for you from my end, just to kick things off.
Mhm.
What have you found in terms of your engagement in social media and how that's kind of fueled maybe some of your own client relationships with the next generation? Has that been impactful for you?
Yeah, I get a lot of students reaching out to me in colleges, like, hey, and so they don't really have money yet. They're not really going to be clients right now, but I think there is an investment there where they're like, oh man, I've been reading a lot of your stuff and like I really enjoy it. And then from me, they find other content creators kind of in my network and things like that. And so it's been really helpful just like seeing what's resonating, what's not, understanding that a lot of them are thinking about career, they're thinking about AI and the impact it's having, right? So there's a lot of these conversations that are being had right now and kind of and how the message you're putting out there is kind of like what's the things to focus on at what point. And so a lot of the stuff I write about is like I'm writing about stuff that like that would have helped me when I was like 22, 23 years old, just graduated college, just kind of starting out there in the working world. And that's kind of the messages that people are resonating with, especially younger investors. And so that doesn't mean that you have to do that same strategy, but I found it works for me, and I think it's an easy way to connect with them, and they'll reach out to you. And some of these people have referred other individuals that have become clients at my firm and stuff. So it evolves over time.
Yeah, absolutely. One question for you here is what are the best ways that you found to create visuals? Canva, YCharts, any particular tools?
I mean, yeah, obviously YCharts. I love them for a host of different things. You can use Canva. It really depends on, eh, you know, there's different tools for different use cases, right? And so figuring out what's the use case I care about, then using that to finding the best tool for that particular use case, right? And so it's hard to know without like knowing more of the exact specific use case you're trying to do, right? And so there's going to be a bunch of different tools out there. So some tools are great, like that's why I love Fundamental Chart for like getting things out quickly, seeing it, having my branding like real quick and easy, but like there's other ways you can do this as well. And so just there's options, and right, figuring out what works and what doesn't. What matters more is the story behind the data and not necessarily the tool itself. The tool definitely matters a lot, but like it's like what's the story you're telling and how quickly and how user friendly is the tool. And that's why kind of I use YCharts for a lot of stuff because I know it. So I just go in there, click some things, and then it's ready to go right away. So
Absolutely. Makes a ton of sense. Another question for you here is how early do you think you should start working with your clients' children? When should you begin that relationship?
I definitely think like once you're kind of, you've had a good relationship with the client for some time, let's say at least a year. Of course, you're going to be asking about the children and everything, but you don't need to start right away. And it really depends their ages too. If they're like 10 years old, you're not going to be starting that client relationship. I'm assuming they're adult children by this point, and ask them. I mean, obviously you don't want to go out and just start the relationship without talking to your client. That's going to seem kind of creepy and weird and stuff. So it's ask them like, well, what are they thinking about money? Talk to your client, and your client's reaction is going to tell you a lot. Whether the client's very open to like, oh my gosh, I was just telling, you got to find hooks. Like if they're like, oh, I was just telling my son or my daughter about this, like, okay, great. Oh, what's like, then you can dig into that, right? They're going to give you easy opportunities anytime they talk about their family for you to kind of say, oh, hey, well, next time you can bring them on the call, right? Just make it seem very seamless instead of going and like and hunting for them. Like you want to just make it seem like, hey, this is a natural part of how this works in the relationship. Oh, would they be interested in coming on one of these calls and we walk through planning? I mean, maybe we can kind of take not because a lot of parents don't want to discuss their financials, the specifics with their children, but maybe they can have like a edited version that says like, hey, here's how a plan works or something of that sort that could be helpful. And so thinking through that type of education you can give I have so many people reach out to me, this is just on the content side, saying like, hey, I really love that you did this. I sent this to my son or daughter. Like they want their children to be educated. They want their children to understand finance. And a lot of people that hire financial advisors are actually very well educated in financial matters. And so they want that to happen. So if you're that source for them, that's incredible. So try and be that source if you can be.
Another question here for you is what do you think are some of the biggest differences between older traditional clients and younger clients that especially in particular to what they're drawn to in your service offering?
I think I mean, once again, you see this in the data. Like it's the asset allocation stuff. There's more crypto. There's more open. There's a lot of people that don't believe in Social Security they're ever going to get it, and there's good reason for this. I'm not saying these are outlandish beliefs, right? So there is a belief of like, hey, the U.S. system's crumbling. Like, what can I do to hedge against that? And so maybe there is a little bit of education about the history of U.S. stocks, U.S. bonds, things of that sort. And trust me, it is like maybe this time is different. There is a little bit of that going on, so you need to kind of adjust for that as well. You can't be like, oh, the 60/40 is going to work forever, even though it has worked forever doesn't mean it's going to work forever going forward. So kind of thinking through that, how to have that conversation in a way that kind of acknowledges these fears, acknowledges some of that, but also acknowledges the, over century of historical data where this process has worked, right? So I think you need to kind of balance both and figure out, things are going to change in the future, right? The asset allocation of old is not going to be the asset allocation for the next, 10, 20 years. So thinking through that, having some of these questions ready and how you would answer them, I think is incredibly important because that's where we're seeing the big difference in terms of allocations and how they're behaving as well.
Absolutely. Well, thank you, Nick. Thank you so much for all of the insights and thanks everyone for attending. Just in closing here, as you'll see on this slide, feel free to navigate to ycharts.com if you're interested in trialing our platform. And if you mention Nick's name, you'll get 20% off of our YCharts professional license. So go ahead and check that out if that isn't something you've done previously. And again, thanks everyone for your time and thanks to Nick in particular for his insights. Hope everyone has a great rest of their day.
Thank you, everyone. And thank you, Molly, for hosting this. I truly appreciate it.